G'day taxpayers, a bit of a preview of next Tuesday's RBA announcement on interest rates, and I'm going to have a quick summary of the data flow that's come out since their interest rate cut in May. And don't forget, in May they did think about delivering a 50 basis point interest rate cut. They ummed and ahed for a little while but decided on the 25. Had they gone the 50, they probably still would be cutting next week by 25. So on the table for the RBA board will be 25 or 50. I don't think no chance is there because the data has just been screaming for less restrictive monetary policy. A couple of things. Let's look at the data first. Since the last meeting of the Monetary Policy Board, we've had very weak GDP numbers. That's sort of swaying very much towards further rate cuts. We've had stunningly low inflation, surprisingly low inflation. So not only is inflation entrenched in the 2 to 3 band, it's now looking like it's going to be below the midpoint of the band. So that's screaming less restrictive monetary policy. Labour market's been a little bit mixed. We've had a big increase and a big decrease, or a small decrease in employment, and the unemployment rate's been steady at 4.1%. Wages growth, not a lot of extra news on wages growth, but basically wages seem to be in the groove, consistent with the inflation target. So you overlay all that with the global economy. Global economic conditions are certainly fragile, and the erratic nature of the Trump presidency and policy settings there, plus geopolitical issues, probably err on the side of trimming rates. So bottom line, they will cut interest rates. The question is 25 or 50. Now, history says they'll only go 25, even though there's more needed. But if they only go 25, well then, there's another 25 coming at the meeting after this one on 8 July. Now, the other thing to remember too is that monetary policy, the level of interest rates, is restrictive. At 3.85%, interest rates are still imparting a negative influence on growth, on hiring, on investment, and inflation. Neutral is widely considered to be in the low threes, let's say 3 to 3.25%. So we're still a good 50 to 75 points from even being neutral. And the way the data's coming out on building approvals, on consumer spending, on business capex, is that we need accommodative monetary policy. So the sooner we get to 3%-ish, let alone probably into the sort of 2.75% range on the cash rate, we will have monetary policy still inflicting a restriction on the economy. So all up, a pretty simple equation. It's basically priced into the money markets, a 25-point cut. So this is probably the least useful bit of information you'll ever get, but certainly signalling that the rate cut is going to be delivered, as certain as you can be about these things. And again, whether the RBA contemplates the 50 basis point cut remains to be seen. They should, but they might not. Thank you.